Let's now talk to Felicity Smith, fund manager and senior analyst at Bedlam Asset Management, about buying opportunities. Felicity, thank you so much for joining us in the studio. I wanted, first of all, just to get a sense of what your thoughts on Porsche and Schaeffler are. These are two companies trying to reduce debt, offering shares, but the market is so volatile at the moment. How desperate must you be to try and raise funds now?
Well, obviously, if you take Porsche, I mean, the car companies generally have seen a massive rebound in demand. There's a lot of demand for luxury cars out in the East, in China and so on, and stock markets have recovered. So if you do need to raise the money, and I think they do, now is probably as good a time to try as any.
All right, so that's a fair argument. Felicity, in terms of your portfolio and your asset management, how does Germany fare in there? Does it look attractive? Is there a buying opportunity? Because actually companies continue to perform and outperform a lot of the European companies.
Well, first of all, we don't go on a country-by-country basis. Obviously, Germany is a very good manufacturing base, but what we're looking for are companies generally across the world that are undervalued relative to their growth prospects and which are in industries where there are tailwinds rather than headwinds. Now, some of the German companies do fit into that. For example, there's still a lot of scope for them to restructure profitably while they're growing their top line, but there's a lot they can do to improve the profitability of those sales by organising internally. Well, for example, you take something like Metro, which is a big German food and non-food retailer. There's a lot it can do to improve the dynamics, and it's benefiting from the fact that the German consumer's getting into a slightly better place now, as well as being able to reorganising its stores, focus more on getting more out of its customers.
And of course, after the defeat at the weekend for Angela Merkel, we're going to see a new energy policy being put in place in Germany. Does that tend you towards some of the solar panel energy stocks?
Well, we're slightly reluctant on solar panels because there's a lot of capacity in the world, in China, for production of these things. And in Northern Europe, you know, solar energy really only works if it's heavily subsidised. Now, we know there's been a big anti-nuclear move in Germany, but the national government has not yet changed. So let's see what happens in 2 years' time. It doesn't necessarily mean we're going to see a rush towards solar across the rest of Europe, and you need more than domestic demand.
Do the elections actually change your portfolio strategy in Germany at all?
Not at this point in time. As I said, we're very bottom-up stock pickers, so we're looking at individual companies and how they will fare.
Now, talk to me about some of the other companies. I know you say that you're like, for example, the companies exposed to the higher growth regions, Bayer, Symrise and Henkel.
Yes. Well, obviously, they're doing very well in their industrial divisions because of their exposure to emerging markets, particularly Asia, but also in the case of something like Symrise, which makes fragrances and flavours, to Latin America as well.
Felicity, thank you so much. Felicity Smith there.